Stock market today analysis for Tuesday, January 10th, 2023. We've got a variety of economic announcements going on. Jobless claims, CPI. Maybe those two will be talked about more than the Fed balance sheet, although that's probably a good one to know. CPI, PPI, PPI. Oh, doubled up there. You can click on that and find out a little more details into it. We're going to get into looking at different charts as we normally do in these stock market today videos. Before we do, let's address this economic stuff. Let's address it in this way. Let's say you're a busy person. You're busy because you got whatever you're doing. I really don't care if it's because you're playing video games or if it's because you are the greatest spouse and parent that has ever walked the face of the earth. You know, it's so relevant to me what you're busy with. What is relevant to me, that if you feel like you're too busy to be paying attention to all this stuff and try to figure this stuff out, then I'm going to suggest looking in the description of this video for this link to iofsuccess.com and download this cash secured put stock selection guide. Download this 3 stocks I sell cash secured put options on. And in that same description below this video, a little bit under the link to iofsuccess.com, you're going to see a playlist that says something like option trading or trading options for beginners. And beginners will be in all caps. It's the first playlist out of 3. By reading these 2 and by watching the 5 videos in that playlist, you're going to have a good idea of how to start paper trading selling cash secured put options. The mission of I Have Success is to help you begin your trading journey by learning how to sell cash secured put options in a way that allows myself to grow and improve in the process. That's me. Why do I want to grow and improve in the process? Because I want to master something. So I'm doing my best to teach something. And I feel that out of all the different strategies that are around, I feel that if you have access to the internet, a bank account, and you spend money at least once a year, a minimum of once a year, then in 2023, there's no legitimate reason why you shouldn't be selling cash secured put options on stocks that you don't mind owning. Stocks that pay you some dividends. Maybe do the wheel strategy. If you don't know what the wheel strategy is, watch that playlist for beginners. Maybe you don't do the wheel strategy. Maybe you just accumulate paper assets that pay you dividends. Maybe get some cash flow from selling covered call options on them too. I don't know, but you know, you can reap some rewards from the stock market without needing to pay attention to all this stuff. It will affect everything, but when you're selling cash secured put options on stocks that you don't mind owning, good fundamentally strong stocks, then it kind of doesn't matter. You know, Johnson & Johnson has been around for a little bit over 100 years. So if you would have started doing this several years ago and you were accumulating Johnson & Johnson, you'd be in a pretty good position. You know, my grandfather passed away recently. Johnson & Johnson outlived him. He lived to be like 96. Johnson & Johnson's over 100. So what do you say? Up here, right here, get ready. In about 10 seconds, there's going to be a link to this video to a video. It's in 5 seconds now. It's at 4 minutes and 30 seconds of this video. And right there, you see it popped up. That's a playlist to not how to sell cash secured put options, but more reasons why I think you should be doing it. I think everybody should be. I think anybody that has internet access, a bank account, spends money at least once a year. Like if you come up with some reason of why you can't, and then I'm going to say, do you have a bank account? Well, yeah. Do you have an internet connection? Yeah. Do you spend money at least once a year? Yeah, but there's no buts about it. There's buts in your mind. There's 0 buts in my mind. The bridge, the boats have been burnt. The bridges have been burnt. This is it without deviation from this. Bank account, internet connection. Spend money at least once a year. Boom, that's it. That's the mission I'm on. Help people get started with this. And my reward for it will be I'll get a greater and greater understanding of the markets. Speaking of the markets, let's get into those markets. Ooh, I didn't want you to see that. So let's pop in the futures here. Alrighty, so now we're looking at a variety of futures, right? Now futures, a lot more tricky, way trickier than selling cash secured put options on stocks you don't mind owning. Futures, man, you got to have a much higher level of trading. But even if you don't want to trade the futures, you can think about the futures as kind of leading the market. Now that's not why they're called the futures. They're not called futures because they show the future of the market, even though it might seem like that's what's going on sometimes, and you can understandably think like, oh, futures, okay, future of the market. Nope. But generally speaking, what the futures are doing could give you an idea of what the other equities are going to do. And what's nice is that the futures trade much, much longer. Basically like maybe 23.5. So in the middle of the night, or maybe not the middle of the night, maybe the early part of the night. Maybe the early part of the morning before the stock market opens. You can take a look. You can take a peekaroonie at the ES, at the Dow Jones, at the NASDAQ, at the Russell 2000 futures, and just have an idea of what you might experience. So let's look at those. What do we see going on? We see this candle. We see this candle had this like topping tail candle way up here. We see one here. We see one here, but these two were green, meaning it closed higher than it opened. These two are red, meaning it closed lower than it opened. But they basically, all pretty similar. And then we had bullish candle here, bullish candle here, bullish candle here, bullish candle here. And now we got this little thing, and it might be just a little bit too early. Look at this. Russell 2000 touching up against that 200-day moving average. Look, it came up to this 200-day moving average, breakout, boom, failed. So let's see what's going to happen. And we see the futures for the VIX. Wow, look at that. Look at that nice smooth move down. Boop, touched right here. What's going to happen? How much lower is it going to go? 10-year treasury. It was in this nice smooth uptrend, and then it had a little pivot here, and it went into a nice smooth little downtrend. And let's point something out for your and my video entertainment. Bottom here, bottom here. Look at that though. That's almost in the same spot, right? So low, higher low. Yeah, you got a high, higher high, lower high, but we're only looking at a 1 month time frame. So maybe, maybe we're going to see things push back up. If this, sometimes what happens, as we demonstrated on gold over here, we're running now, since this is on a 30-day time frame, there's roughly about 30 candles here. So tomorrow this one will disappear, and there's going to be a new one. And so now we're slowly getting out of this. But look at how there was this range of a top here. Kind of right in this range, right? Sort of like wherever you want your range to be, it's going to be somewhere like that. And look at over here. Prices, I think it might have been going back even further. But you can definitely see here, prices were pushing up this way. And sometimes what happens is that when you got a spot like this, where it's basically hitting some sort of resistance or support, and then on the opposite side you got prices keep pushing up, pushing up, pushing up. It's kind of like tightening up a spring, tightening up the springs, tightening up the spring. And a lot of times it breaks to the side that's not moving. Boom, worked out well here. Right now we got these pretty big Bull candle, pretty big bull candle. Okay, this one was totally ignored, right? Sell off, but boom, look at that, came right back up. But now we're up above, we're above this last candle, so that would be considered bullish. But it looks like we're running out of steam, right? We're not getting as wide of movement, wide of range of candles. So let's see how it goes. Got two of these kind of small body candles. Now, silver was kind of doing the same thing right in here, right? But look at it. So it doesn't seem to work 100% of the time. So it kind of broke out that way. So maybe we'll see a little more press up there. Now, this one, and this one, these have a lot of politics involved in them. Whether it might be obvious, whether it might be not obvious, whether no matter what you think. And I'll give you an example about sometimes what we think might not actually be reality. So when I was in high school, my cousin came over with a couple of his friends, and I didn't know his friends. We all kind of listened to the same music, and we were in my bedroom for a little while, and then eventually they left, and a couple days later, this is back, I'm 46, so this is back in the days before CDs, when music was listened to on cassette tapes. So obviously it was before MP3 and all these digital downloads and things like that, before streaming. But anyways, so there was a specific cassette tape that I couldn't find, and I was a pretty organized person. I would have my cassette tapes in certain places, like in certain order, alphabetical order, things like this. And my buddy Brian was over my house, and I was like, oh, okay, so yeah, all right, so I thought they stole it, and I'm like, oh man, these guys, they stole my tape. One of these guys stole my tape. And then my buddy Brian was over one day. This might have been months later. My buddy Brian's over, and I happened to look under my bed, and I found this other little carrying case for tape cassettes, and I found that tape, and I just start, and I didn't really realize I was saying this out loud, but I was like, they didn't steal it. They didn't steal it. Oh my God, they didn't steal it. And Brian's like, what are you talking about? So here's the thing. For like several months, I was living under the delusion that these guys stole my tape. The whole time the tape was under my bed. So whether or not you think, whether or not you believe, because I believed they stole it. You know, people say that whatever you believe is your reality. Well, I believe they stole it. So why was the tape still there? Now I get it, we're getting a little philosophical if we're gonna get in too much into this, but here's the point. Exactly, this one, and some other things. There's a lot of political involvement in doing things with a price. You don't have to believe it. I did not believe that my tape was under the bed. I believed that they stole it. But indeed, the tape was under the bed. So natural gas, it's just going down. That's a smooth ride down, isn't it? It's like, hard to, I mean, you see there's nothing that's really like, hey, this is some support or resistance. It's just, we'd have to look at maybe a longer time frame. Maybe it's going to start slowing down. I don't know. Like here, it kind of slowed a little bit right through there. Oil seems to be in this range from about somewhere in the 80 to somewhere in about 70. And silver, we talked about that a little bit. Bitcoin kind of doing its thing of just, I'm waiting for it to drop down again. Bitcoin's just, to me, kind of got boring. It just kind of goes like this. It's kind of what it does. It's just lately, like the last 6 months, 8 months, 9 months, I don't know. Okay, equities. So we got our futures of the 4 major indices here. S&P, Dow Jones, NASDAQ, Russell. And in a way, it looks kind of similar. Ooh, that doesn't look good. You know, these last couple days, right? Looking kind of looking similar. Was going sideways. Started moving up. Is it gonna build up? Is it gonna go sideways like that? What's gonna happen? It's kind of going sideways. Moved up. Is it gonna stay on top of this area? We will see. I'm not putting a big forecast. I do have a couple trades on, but I'm managing one trade. I'm long a variety of stocks, and I have covered call options sold against them. And I have a cash secured put option on one stock. And other than that, I've got a lot of my buying power wrapped up in a specific option trade. So I'm managing that option trade right now. And I'm not putting on any more trades because I want to keep my buying power as high as possible in case it moves against me. Because I think in the big picture I'm correct. And in the past, especially from trading crude oil futures, I've sometimes run into problem when I was correct in direction. I was correct in how far it would not go. It didn't go to my strike price, but the margin got me in trouble. Just didn't have enough margin to maintain that position. So I learned my lesson. If you don't know what I'm talking about, man, just stick to selling cash secured put options on stocks that you don't mind owning. You don't have to worry about that stuff then. General markets, daily. We already went over these three. Look at the dollar. We saw it yesterday. Drop down here. I don't really know where this range. It seems like it's back into this downward channel. So when the dollar is dropping down, other assets can be going up. Now, I've covered this before, and it's worth covering. You might have heard this on other places, but sometimes what's happening, sometimes, not all the time, and you want to be able to understand that it could be this or it could be something else, and I feel it's in your best interest to figure out which one it could be, or at least what you think it could be. So here's what I'm trying to get at. Now, sometimes, let's say we would consider gold an asset. We got crude oil, consider that an asset, Bitcoin an asset, and in fact, let's just consider all these over here an asset, and treasuries, those an asset, but we're not going to consider this one an asset. Because to me, I view this as the fear index. It's a volatility index. So I don't really see how that's an asset. It doesn't really produce any income. Treasuries can give you a yield. Gold, you can do a variety of things with gold. And one great thing about gold is like you can melt it down and reform it, melt it down again and reform it. It doesn't rust and it doesn't go away. You can just kind of use it in perpetuity. Oil, you can heat your house. You can use it to maybe make some fuel. You can turn it into plastics. It's probably used in the process of making shoes. You know, lots of good things come from oil. And then Bitcoin, I have no idea what good thing might come from Bitcoin, but we're considering an asset anyways. And then we got all the stocks over here. Oh yeah, you know have you ever considered being a business owner? All right. How about owning partial ownership of a business? All right. So anyways, so we see all these circles. These are assets, right? And I know, get it. I get it. In case you were just thinking that these are futures contracts. This is not actually gold. This is not actually Bitcoin. This is not actually oil. I know. Well, we're just using them as a fiat representation. All right. So sometimes what's happening is these assets are not going down or up in value. This is the key word here. Value, right? Value. Sometimes. Now, sometimes they are going up and down in value. But sometimes what's happening is that the movement of the fiat currency you are purchasing the assets in, as the value of the fiat currency goes up or down, then it might take more or less fiat currency units to purchase the assets. So if the fiat currency you transact in goes up in value, then it would take less fiat currency units to purchase assets. If the fiat currency you transact in goes down in value, then it would take more fiat currency units to purchase assets. So how could you use that? Well, the first thing you can do, think about selling cash secured put options on stocks that you wouldn't mind owning. You wouldn't mind owning them because they're good, fundamentally sound companies. Well, if the amount of fiat currency it takes to purchase those, maybe you kind of decide where you want to sell your strike price at based on that. If the value of the company isn't changing and it's just the sticker price to purchase the company is changing, it could be due to this, or it could be due to other things. But it's just it's something to keep in mind. And the more you grasp this, it puts you in a better mental situation to make wiser decisions for your own life. That's really the point of it, my friends. Make wiser decisions for your own life. So we got the VIX drop down today, getting closer to that 20 mark. And yeah, it looks like seems like the various sectors of the stock indices of the stock market might be trading into a little bit higher trading range. Let's see what happens definitely by the end of the week. See if that's going to continue. And this one really stood out to me earlier. Right? If it's going to break above this, then it could be an indication that it's going to go higher. But you see, it's been on a pretty good run up here. For me personally, before I went long on financials, or just not financials necessarily, let's pretend no matter what company you're looking at, right? If you saw this type of you saw this chart, keep in mind you probably don't want to make financial decisions on a 1-month chart. You probably want to look at, maybe start off looking at a 10-year monthly chart, go down to maybe a 3-year weekly chart, and maybe look at at least 6 months on the daily. Right? You can look at a variety of things, but to try to get a bigger picture, because this is just a little snapshot. But nonetheless, just for training purposes here, right? If right now we see what happened here, touch to this 35, what is that? 35.50, right? The next day, this next day right here, it got to a little bit over 35.50, opened right at that 35.50, traded a little bit above it, and then end up selling all the way down to here. Today, opened here, traded up to that 35.50, couldn't do it, even pulled back just a little bit. So right now, we got to see it break above the 35.50. If it can't break above the 35.50, it's not breaking above 35.90. And if it's, yeah, well, so let's see, right? We see 35, and just from looking at these for a while, I think 35 was a pretty important number, and so it's above that. But is it going to stay above that? Look at it was way over here before, and it dropped back down into here. So we will see. So technology rallying up a little bit. Let's see what's going to happen. I mean, it could potentially be building a base to kind of go higher, or it could drop down. I wouldn't be surprised if it's just going to kind of go up for a little bit, drop down, come back and test this. Healthcare, really a turnaround from last month and the month before, because this was a strong sector for a little while. It really sold off, and you see it's just kind of been getting stuck at this top part of about 136. Now it's starting seemingly to come down. So let's see what's going to happen with that. And XLI looks similar to this, but it's just not as, yeah, it kind of looks similar to it, but it's just not as like, didn't have as much of an up run here. We still have the same thing. Like it's battling, apparently maybe this 102 or whatever that number is right in there. It's got to get above that. And you see, like they're basically this one, this one, this one is all the same day. It's a lot of similarity happening until it's really the whole market. Like we got to see it. Ooh, except for oil, or excuse me, energy. Energy looking different, right? And just on this, looking at 1 month, it's like kind of maybe you got a W going on. Seems like it's kind of basing right somewhere in there. Consumer discretionary sort of bottoming out right through here. Seems to be going up a little bit. And consumer staples. I think we talked about this one yesterday. Potential looking like an M, but boom, it's falling off here. Our M is falling off. Look at that though. It could just really be kind of range bound. You know, different levels of ranges. So maybe it's got a higher range up here. So that's what I'm wondering, if we're going to be building a higher range with some of those. And utilities. Look at that. It's just sideways moving. 200-day moving average. Just kind of battling it there. Got kind of this like sort of like this range in here. Maybe it's going up to a little higher range. I don't know. And well, look, that retail is really trying to make a run for the upside. Let's see what happens when it gets around this 200-day moving average. So at the moment, I'm continuing to, I had mentioned what I'm personally doing. Like there's certain stocks that I either accumulate by just buying shares or by selling cash secured put options, usually a combination of both. Right, sell cash secured put options on them, and sometimes just flat out buy the shares. And I have so I've got a number of longs, stocks that I'm longing. The stocks that I'm longing, I don't mind owning these stocks for 10, 20 years. They're fundamentally sound companies. If they don't have the greatest fundamentals, there's something else about them that I like that makes me feel confident that they will be around. And also they pay dividends. Most of them pay 3% or more. There's a couple that pay less. And I have I'm attempting to buy shares of a particular stock. So I've got cash secured put options sold against it. But let's pretend it is definitely not the stock. But let's pretend that take these numbers out, because it's not $100. It's not $100 stock, and it's not this. And it definitely, it doesn't even look like this chart, but just for a reference, right? I want to buy the stock that I have cash secured put options sold on it. I want to buy it, but I don't want to buy it at the price that it's currently trading at, right? Just like if this one, I wouldn't want to buy it up here. I want to buy it down here. So I've got if this was the chart, I've got probably a put option sold somewhere in this area. It's pretty far away, and more than likely I will not get exercised. I didn't really take in a whole lot of premium, but that's okay. I took in premium, and it's kind of less about, for this particular trade on this particular stock, it's less about how much money can I make on the premium. It's more about I'm making some money, and I'm in a position where if this stock drops, I'm going to snatch it up. The other thing that I like, why I like to do this, is it really makes me focus more on stocks that I have some sort of position on, I pay a lot more attention to. So if I potentially want to purchase a stock, I'll start selling out of the money cash secured put options on it, just so I pay attention to it more. And then even if those put options don't get assigned, like let's say it drops down the stock, I got my put option down here, but let's say it drops down here, and I don't think it's going to touch this. I just might start buying here. Maybe I just buy shares. Maybe I sell another cash secured put option right in here. You know, just a variety of things of what can happen. Now, if you're, I'm super comfortable with doing this, mainly because I've been selling cash secured put options on stocks that I'm comfortable owning for several years, and it's just like what I do day in, day out. I do it, and so month after month after month after month, I constantly have cash secured put options open in the market, and I'm super comfortable with the process. If I get assigned, I only sell cash secured put options on stocks that I don't mind owning, so I just kind of don't care. Now, other trades I might sell a naked option on, and technically maybe I have the money to purchase a stock, but in my mind it's naked because I'm not purchasing that stock. if it starts going down to to touch that strike price, then and if it's a stock that I just do not want to own, I don't want to be the bag holder. You know, I want to be playing musical chairs and the music stops and I don't got a chair. You know, for example, I'll sell naked options on GameStop, but I don't want to be a GameStop owner. You want to be a GameStop owner? Go for it. To each their own. You like vanilla, you like chocolate, I don't care. You know, you do you. Brent doesn't want to be an owner at GameStop. So you know, so what does that mean? Well, technically it means like if I don't want to own a stock and the stock is running up and I just want to do an option trade, then I'm gonna trade away from the, I'll sell an option away from the wherever it's trading at. Like when this was dropping down, maybe I'll sell something up here. Now that it's moving up, maybe I'll sell something down here. Now, I know sometimes what happens is that, well, you know, when it moves against you, you know, then you can't close it out for as much. I tend to do it so far away, and it's true, you know, sometimes that happens where it's like I have to keep that position open basically until really close to expiration. Then it really starts losing some value, because let's say it gets caught in here, stays above this 200-day moving average, and let's say I sold at 33 and it pulls back down here to like, I don't know, anywhere above this moving average. I got it at 33, but it doesn't drop below 33.97. Yeah, I probably won't be able to close my option out with a profit until it's much closer to expiration. But I might not be skilled, but I'm fairly experienced at choosing strike prices to potentially sell at that have a low probability of getting filled. And for me personally, I will take a lower option premium to have a higher probability of success. Now that's me. Like, I am totally fine in this strategy being the tortoise. Other strategies I will implement less often in attempts to be the hare. Like I have one on right now, and it requires a lot more management. But what I love about selling cash secured put options on stocks that I don't mind owning is that they don't really take much management. It takes some due diligence, some work in the beginning to figure out if this is a good company that I think will be around for the rest of my life, in case I have to own it the rest of my life, and does it pay a dividend, and kind of things like that. There's more to it than just does it pay a dividend, and do I think it'll be around? Like, are they profitable? You know, at the end of the month, do they have money left over? Are they in a heavy lawsuit type of thing, and they potentially going to have some lawsuits coming up that are unforeseen? Ideally, if you can find out a little bit about the management, you know, you got a scandalous manager that one day he's going to pull a Harvey Weinstein, or he's been pulling Harvey Weinsteins for the last 10 years, and all of a sudden, boom, you know, everything blows up. Or you got some companies that they just like clockwork. They just run like clockwork. You know, Andy Tanner likes to talk about Hanes a lot, or like Kraft, you know, ketchup, underwear, you know, stuff like that. Pharmaceuticals, you know, you could, you know, you get a bunch of people dying over some weird pharmaceutical. Maybe they try to sweep it under the rug, but maybe they're not able to. I don't know. And I'm not saying anyone is dying from pharmaceuticals. I'm just saying, like, obviously, you know, people. What's going to happen? What's the worst thing that could happen if you get some bad underwear? You get a hole in it kind of early. You know, like there's not much not much can go wrong when you're selling underwear. There's a whole lot that can go wrong when you're selling, let's say, supplements. You know, anything you're putting into your body. There's more things that can go wrong. Cell phones. You ever heard about one blowing up? You know what? I think they do once in a while. So electronics, sometimes they can go haywire. Cars, you know, things like that. Alcohol, cigarettes. And you kind of get my picture, right? There's certain type of companies that are selling products or have a service that maybe there's a little more liability, a little more legal liability, potentially to get sued over some stuff. So when in doubt, paper trade. That's the first and foremost thing. Paper trade. Why? Because you get experience and you cannot lose real money. The experience is priceless, though. Now, just in case some people, paper trading, you don't get the real emotion. All right. So I have a few buddies that they are professional MMA fighters. You probably haven't heard of them. They're not popular, but nonetheless, like if you look at their paperwork, they're professional MMA fighters. So since you need the real emotion, I'm going to do you a favor. I'm going to set up a fight between you and my friend, and you're going to get the real emotion. That's how you're going to learn. You're going to learn by getting knocked the F out. You're going to learn by getting your teeth knocked out of your mouth, choked unconscious, maybe a broken arm. And that's great, right? Because you got to have the real emotion to learn. Right? You see how silly this is, right? You see how silly it is. You're not going to try to learn to fight MMA by your very first week fighting professionals. You're going to punch at the air. You're going to kick at the air. You're going to hit a bag. Maybe you'll hit some mitts. You're going to do some drills with a coach. Probably going to do some sprints. You can do some push-ups. But none of that stuff is fighting. None of that stuff is the real thing. So why is it okay to do it in sports? Why is it okay to train and drill and practice and scrimmage and spar and all these things? Why is it okay in sports? But when it comes to your paycheck, to your money, to the thing that feeds your family, all of a sudden you got to be macho man to have the real thing. Come on. Come on. Get your mental philosophy in check. Don't be falling for that BS. With that, you guys have a fantastic day. Aloha.